This is David Patrick, Fitzstock Charts market video update for June 26, 2019. We're in a 15-day uptrend and we're stalling. This is the fourth uptrend this year. We had 11 uptrends last year. We're going to look at the higher time frame. We're going to look at 2012 historical chart pattern comparison, which is starting to get a little bit sloppy along with price. And to top it all off, we're heading into earnings season very soon in a few weeks. Risk management. It's everything. We need to talk about it because you have to know where your stops are before you enter. If you're going to go all in on spider calls, you better know how much money you're willing to risk. If you're going to go all in on Apple calls, you better know how much money you're willing to risk. If you're going to take all of the ESFL stock or option entries, you better have predetermined stops on all of them before you enter. That way you have no emotions. You trade like a robot. And if you're risking XYZ on every trade, that's your risk. If you only can stomach a $20,000 max loss on a market drawback or pullback, then you allocate accordingly. If you can only stomach a $1,000 one, allocate accordingly. So emotions and opinions do not get in the way or interfere with your stops. You have to be a robot on the way up. You have to be a robot on the way down. There's going to be good months. Sometimes there's not good months. You have to trade what the market gives you. And when the market gives you sloppiness, you see what I do. I pull back the throttle. I take things off. I book profits. Sometimes I get stopped on runners at small losses or even break even. I'm okay with that. I don't want to ruin a good year. I don't want to give back a lot of profits. And if we do see price strength confirmation, I'll get aggressive again, like I always do. You have to stick with the game plan. You cannot get emotional with a sloppy tape. The ESFL 234 different options have triggered, stocks and options have triggered, engaged. 6 no scales, 22 losers. I think we had 2 new losers, FAS and CYBR. That'll be 22 losers on the year. We're still batting 880, 88% win, which is unheard of. That's why it's so imperative that you define your risk before your entry and allocate accordingly. And to elaborate more on this, and you've seen me say this with videos before, get long the index first. Get long spiders. Get long SPXL, which is triple long if it meets your risk profile. Get long spider calls. Get long ES. Whatever it is that you can stomach the risk on, that's what you get long first. Then start allocating stocks that meet your risk profile from this ESFL focus list. If you are not comfortable with options, please don't trade them. Paper trade them until you get comfortable with them. You have to understand them. Otherwise, stick with stocks. Once again, there's people still long Tesla from $44 or Apple from $50 from the service. They didn't have to know how to trade an option. In fact, some of them didn't even know how to scale. They just held it. And now they're long versus their stop. You have to trade the rules of engagement, the methodology, the right way, and you have to fine tweak it because everybody's different. You have to fine tweak it to meet your risk profile, whether you're trading stocks, options, or how you're allocating your risk. Okay, so yeah, you can see right here, the ones in the gray are the no scales. So yeah, we have some stragglers out there. I like to call them hangers because they're just hanging, and they're most likely in the red right now because we've been unable to get 1% gain where we scale, which is equivalent to 7 to 10% in the option. 2% gain, which is equivalent to 15 to 20% in the option. I want to give another illustration to that risk management. I was a little bit off with my numbers. The bottom line is approximately every 10 trades, if you allocate it accordingly, if we kept our performance numbers up near 80% win, you should still get around 35%, and that's every 10 trades. And I'll go over another example in more fine print on that. Unfortunately, I don't have the time right now because I'm going to be out of town for the next couple of days, but I'm still going to be running the service. I'm still going to be on Twitter tomorrow. Friday, I won't be on Twitter. Monday, Tuesday, Wednesday, I will be on selectively. I don't know the hours I'm going to be on. I'm out of town, and I just don't know. Thursday, I should be back, but I think Thursday's a holiday. The market's closed, and then we'll be right back to schedule on Friday. So we're going to be all over the map with Twitter, but not the service. The service is the ESFL, the charts, and the video updates, and those should come, as they normally come. Okay, so getting back to the risk management part here. We're 5 minutes into the video. So when you get a hanger, one that you've been unable to scale, it's very important that you never question the trade. We all know nobody's going to bet, you're not going to have 100% win. So since we launched the service, we've batted over 750. Let's call it 75%. This year, we're having an exceptional year, 88% currently. But with that said, you're going to have losers. You have to define them. So if you took Netflix, you already know if you're a hybrid trader, your stop is the previous day's low. By the way, you saw me take Netflix long on Twitter. I did not make money on it. And I don't make money on every single trade I take. But you know what I did? I cut it fast and I move on. I don't cry and whine about it and worry about it. It didn't pay me right away. Okay? When things don't pay me right away, I hedge them. Either I sell a cover call, some people would buy a put, or you puke it out. Okay? Swing traders are going to give it more room to run. They're going to use the ESFL stock right here. They put things on. If they're taking coup and they're taking it short and they only want to risk 10 grand, they're shorting here and they know where their stop is. So they're going to short 1,000 shares. Everybody's different, but you have to define your risk. When I took Netflix long, I actually sold a cover call at the same token to give me some wiggle room because I already had enough long market exposure on, right? I saw it wasn't working out right away. And I think I peaked it out the same day and posted it. So I made profits on, maybe it was the next day, I made profits on selling the cover call and lost, I don't know, it was a couple of dollars, maybe $2 or $3 on the stock, which is nothing. Because if you're allocating 5% and you're losing 1%, but you made half of it back in the options, you're losing a 0.5% on 5%. That's like 0.25% of your money. So you should never put yourself in a position to get destroyed on a measly market pullback of 20 handles, which is 1%. You can't put yourself in that position, okay? Because if you're putting yourself in that position, you're going to make an emotional decision. So once again, to reiterate this, so we understand how important risk management is, ask yourself in uptrends, when market pulls back, how much can I stomach? Some people it's a couple $1,000. Some people it's 10,000. Some people they're going to stomach a $50,000 drawback. Everybody's different. But write that number down and say, all right, on all my positions, I can't let that XYZ number get hit without, becoming emotional. So maybe you cut that number in half. That way you're never emotional. You can't be emotional with the market. You'll never consistently make money if you're emotional. Keep emotions out, keep opinions out. The game's not easy. I do say it all the time. If you trade 5-minute rules of engagement, you get paid. It's crazy on how well we get paid. If you trade the ESFL on the long term, since we launched the service back in 6 years ago, there's a very, very good chance you made a fortune. There's going to be times maybe you slicked the wrong ones, and maybe you took 4 of these and only 1 winner. Maybe you just randomly selected 4 and you got 1 winner and 4 losers. That can't happen. That can't happen. And that's why I emphasize, A, get long index first, and B, you don't need to have more than a max handful of stocks on at one time. And if one of them is the spiders, now you're only talking about 4 ESFL entries. So you would have made money on the spiders because that's the index first. Even if you took 1 loser or 1 winner and the rest were losers, you got 2 winners, 3 losers, and almost a worst case scenario. How many uptrends have we been since we launched the service? We know last year we had 11, this year 4, 15 uptrends. If one of them happens to roll snake eyes and you batted 40% with that example I just gave you, that's not the end of the world. So the numbers are in your corner. Are all uptrends created equal? No. I could tell you right now, this last uptrend we were in probably made the least amount of money. By far, it doesn't even compare to the other three. That first one, I crushed it out of the park. It was a 44-day uptrend. Every uptrend's different. Sometimes I destroy it, and sometimes I give too much back. Everyone's just different. So, all right, I know I rambled on. I just wanted to talk briefly about risk management, define your risk, the ESFL, our numbers, and keeping emotions out of the market. It's so important. It really is. Our 90% club, 31 triplers this year, 122 doublers, 296 triplers since we launched service, 1,065 doublers since we launched service on just trading rules of engagement. The numbers are proof the methodology works. So we're looking at historical chart pattern comparison of 2012 on the left, 2019 on the right. Are we in this shaded bull flaggish area where we test the 10 SMA and grind higher? I don't know. Why did I get defensive? There was just a lot of sloppiness I didn't like. And when I see sloppiness, I just back off because I know I can get in, and sometimes it is at higher prices. And I have any problem with that. What I hate is a slow, sloppy tape because I see it eat up my money and I see it eat up a lot of other people's money while the market just grinds. Now, if it's grinding higher like here, that's no problem. But when we come to the 10 SMA, which so far is fine and hold, but the NASDAQ just broke the 10 SMA yesterday and now gaps up today, that's extremely sloppy. And let's look at that real fast because this is really hard to get an edge or, some kind of higher probability than 50-50 when you look at this NASDAQ, right? You had your broken uptrend, then you gapped up on a mammoth gap up this morning, puking back down. We have no idea where we're going to close. I'm doing this video around 3 o'clock. I don't know if we close at the low of the day. Maybe we come back, close back above the 10 SMA. I don't know. I do know that this is still a cup and handle on the NASDAQ and the S&P, but that doesn't mean, you got to remember, a cup and handle is not our number one trading pattern. A bull flag is, all right? Our second would be, like a WV bottom or break of a downtrend line. A cup and handle or even inverse head and shoulders, those are slow developing patterns and they're more difficult. You don't get paid right away. And a lot of times you second guess the pattern because it gets sloppy. This is a pattern that could work out still much higher, but it might get sloppy first. We have gaps right here to fill. Maybe we do a Fibonacci retracement. Maybe we retest the 200. There's so many things that can happen. And that's why I say, I've reduced exposure yesterday. I reduced exposure today. That, if we go take out new highs, I'll just go put a couple hundred spider calls on. Once again, that's not for everyone, but I can easily put that on and make up ground fast rather than sit here and be, 90% long market exposures and see the drawback all the way down here, which I'm not predicting. We just don't know, right? Current price structure, it's right at the 10 SMA. MACD's curling over slightly. The weekly's still bullish. It's hard to really get bearish. More or less, it just looks like some kind of sloppy consolidation before earnings. And you know what? That's not when I make my money. If I roll back and looked at my spreadsheets, my P&L over the last 20 years, or even since we launched the service 6 years ago, this is not when I make my money. I make my money early in uptrends, right? Let's point them out. Uptrend, this was uptrend number 4 here. This is the SPX. This is uptrend number, actually, we had this uptrend that got knocked out real fast, but this was our first good uptrend. I think we got knocked out there, our second good uptrend, and our third good uptrend. And now our fourth pretty good uptrend. But now, we got toppy. We did hit new highs. And by the way, triple tops barely ever hold. And as of right now, they're holding. But that's a lot of times what happens with a sloppy cup and handle. But yeah, the new highs were hit without MACD, so you got your bearish divergence. And you're not seeing follow through on the downside, you're not seeing follow through on the upside. So what are you seeing? Real simple. You're seeing sloppy trading. Sloppy trading can be frustrating. I see a lot of people just give up. They rub their hands and say, I'm done. Because it eats them up. What do? I pull back the throttle. It's real simple. I know I cannot win consistently in sloppy trading, so I just pull back the throttle and wait for better high odds setups. So, you know, I got stopped out of runners in Microsoft, Lyft, Netflix. What else was I long? Something else I can't even remember now. And then I booked some profits in SPXL because I didn't like the tape. Not because I'm bearish. I just don't like the tape. And I don't like giving back big profits either. And I've already given back too much as it is. So, okay. I know we're 15 minutes in now. We can finally start talking about the rest of the market. So, we talked about the NASDAQ, talked about the S&P. I looked at the Dow. Let's look at oil futures. Someone pointed out a bull flag here on Twitter. Yeah, I mean, more importantly, you know, oil's been bearish for a while. But more importantly, rather than a bull flag, quite simply, is a break of a downtrend line. And then you bull flagged right here. Is this another bull flag? Yeah, that's fine. But the better entry is early in the uptrend. So if you are a futures trader on oil, there's your entry. It's very difficult whether this thing breaks out or not. This is a difficult entry. You have 50 through the 200, and you know you already got paid in this uptrend. So you know oil futures to me at this point, I think is a difficult trade either way. That's my personal opinion. Same thing with the XLE. It came drifting up to resistance, and now it's stalling. I don't see a big edge there. IWM's been a trading range forever. I don't see an edge. Transports is in that huge wedge pattern. I don't see an edge. IBB, I would like to see some kind of leadership in that sector. It's puking back over. Gold. We've been bullish gold since this breakout. Simple. We talked about this break of a downtrend. Another bull flag here. That erupted. Bull flag breakout, our number one price pattern. And, you know, up in no man's land up here, you just got to be very cautious. It's exhausted. Doesn't mean it can't go higher. We've been bullish bonds for a while. We came down here. We got knocked out of trend. I did think we'd come back and test highs. We did. And now it might be time for some consolidation. However, if the ES does roll over, there could be flight to quality and bonds could rip higher even more. You know I've been long or bullish bonds since down in here, especially since we saw the golden cross earlier in the year. So that was the signal. So if you're stuck in a stock, let's say like from Apple when it engaged hasn't paid yet, sell a covered call, get out, or do something to lighten up long market exposure. If Apple does see price strength confirmation, put the thing back on, put calls back on. It's got a magnet up here. It's very strong, showing relative strength in sort of a weak tape today. Is this sloppy? Yeah, that's sloppy. That's very difficult. Apple's been on the 90% club, I think, 3 times this year. They've been from bull flags, you know, here, and here. And we talked about a bull flag right here. This was the better trade setup. Up in here becomes a little bit more difficult. But yeah, there's meat of the bone to 210. I am not an Apple. I just don't know if I'm going to take it. I think it looks fine. But if I do take it, I'll post it and you'll know. Amazon, it's an elongated not bull flag, cup and handle pattern, just like the market. I don't see a huge edge here. I just see more sloppy trading, bookings doing nothing. Well, I'm seeing a ton of Teslas on the road now. We just passed by a huge truck full of Teslas. I don't know. I've seen more Teslas on the road. I don't know the interpretation of the stock price, but there is so many Teslas out there right now. It's crazy compared to where there was 5 years ago, obviously, or even when it launched. But once again, your opinion on a product, whether it's Apple product or a Tesla car, has nothing to do with where you think a stock's going. It should never have anything to do with it. The facts are, Tesla really is in a bear market, and it continues lower below all moving averages, stalling here. Just because it's in a bear market doesn't mean it can't squeeze higher. It can easily go back to 280. It's in some kind of, I guess you could call that a bull flag, still above a downtrend line. MACD's stalling. It's stalling. It's not a great setup here. Facebook getting sloppy. Google, it did engage short today. It might have 1 or 2 more down days. Who knows? I highly doubt it's going to break down. Now, some strong stocks, these chips. NVIDIA's on fire today. Micron on fire. AMD bouncing. Texas Instruments. Avgo. Texas Instruments looks really good, actually. OLED. Xilinx. What is Xilinx doing? Trying to break that 50 SMA. That's looking better. So we do have the semis. Microsoft got knocked out of trend. I think it's going to be just like what we saw with CME, or actually, what was it? Not CME, but what were we just talking about? We were talking about TLT. And we'll get to CME in a minute. But TLT, where it comes down, breaks down, retests highs, and interest sideways. Microsoft still looks fine. I just think the wind could be out of the sails where it just trades sideways. Oracle's still bull flagging. You know, it looks like a market leader. If the market's going to go higher, I think Oracle looks very good if it does engage to the top of that flag pattern. We're talking about chips. We're talking about tech. Let's go over some selected Coop engaged short, Adobe. If I could type it correctly. Breaking down a little bit now. Now looks like a short. Workday looks like a short. FFIV. Team. Really weird how the Nasdaq's strong today and a lot of these stocks look like shorts, which is just more conflicting data to make your head spin. And you know, by listening to these videos and following the service, if you've been with it for a while, you know when I have conviction and you know when I have size on. I don't have no size on right now, and I don't have a ton of conviction in the short term the next couple of days because I just don't know. First of all, I'm going to be out of town the next couple of days, but second of all, it's not giving us a big trading edge right here. We need more data. We held that 10 SMA on the SPX yesterday. We're rechecking it again today, and I don't know. We're just going to find out more data every day. Right now, it's not enough movement to tell me we're melting down, and obviously we're not reconfirming price strength, so it's very difficult tape. NTES, YY, Box. What did we just look at? Was it Snap? Snap actually looks pretty bullish. Panwa, Vive. Yeah, that's breaking down. Let's look at some oil, COP. Wow, that's a nice move in Phillips Petroleum. That one could be in for higher prices. PSX. Ooh, some of these actually look decent. I haven't looked at them in a while. Exxon. A couple of our old leaders in that sector look poised for higher prices. What about the casinos? There's Wyndham. I want Win. That's not showing anything low. MGM. No, I don't see a trading edge there. The cannabis stocks. Kronos. I'm all over the map here. Sorry to say. Kronos. CGC, GBTC, someone, oh geez, GBTC, I haven't looked at this in a while, and someone had requested I put on the video. You know, we tracked this, I think when it IPO'd, and actually we had a couple nice trades on it. So yeah, I mean, this is a crazy crypto ETF, the Bitcoin, and this is insane. Yeah, it goes from, let's see if we can go back a little further here so we can see this thing. 20 or so, and back in here, I think we had a couple long setups right here and right there, and then it started melted down. This thing went from 10 to 38. I mean, essentially 4 times itself. So we just went from 4 to 18. I mean, 4 times itself right there. So this thing moves. So in the bottom line, if you're using trading rules engagement, and we haven't looked at this in a while, this is really simple stuff, right? You don't have to pick the bottom. Preferably, you want the 50 above the 200. And then you saw the golden cross. You saw bull flags, another bull flag. And this is a good setup. And so this is confirming new highs with MACD. This is one of these that you can't pick a top. This thing could go right back to 40 bucks. It's hard to chase. It's super high risk. But it's still bullish. It's a bullish looking chart until it isn't. So I would not get in front of the train and short it. At the same token, obviously it's extremely, extremely overbought. Okay, so what else are we going to look at? Amgen. I got to change my time frames. Okay. Amgen, not too much. Gilead, IS. Oh, Gilead. That's rolling over. It doesn't look good at all. ISRG, Alexion, TX. I'm having some serious issues typing today. I don't see a lot of leadership here. REGN. Oh, that one looks like it wants new lows. ALGN. That looks really bad too. I mean, I'm looking for leadership and we're scanning. Let's look at CMG. That was a big leader starting to stall. UBMT, Twillo, IQ. How about Uber? Stalling. And what's the one I just sold my runner in today? It hasn't done anything wrong. I just was lightening up on things. Actually, I still like this price pattern, to be really honest with you. I do think if it gets back up here, I probably would put some calls on if I wasn't going out of town. I still think this one goes to 70 bucks. I don't like the way they tape the market. Like I said, I go to safety when it happens, and that's been freeing up a lot of positions in the last few days. Lyft, to me, still looks fine. We've been over most stocks here. Let's flip over and close it out. I mean, we're 24 minutes in. We talked about a lot of things in this video, everything from risk management to our returns on the ESFL, our 90% club, to keeping emotions out, to defining your risk before your entry, understanding that every uptrend's different, to get long the index before stocks, and all these things are very important. And I wish early in my trading career someone pounded the table on these things also, because I was stubborn and I made a lot of mistakes. And not that I'm saying I don't still make mistakes, I do, but I don't repeat them. Like, for example, if I made a mistake yesterday about too big a size on Microsoft or something, I'm not going to repeat that. It's not going to happen again today or anytime in the future. But I do, when I have conviction, like you saw in Apple and Xilinx this year, I'll put on size. I didn't have any big size on in this uptrend, other than allocating SPXL, which is the index. You saw that. I had a lot of conviction the index was going higher, and I didn't really have a lot of stock option exposure. I put on a few stocks, like I said, with Lyft and Microsoft and a couple other things. Shop was another big winner I had. By the way, I don't think we looked at Shop, so let's just finish on that. But this is one, we had Shop engaged back here, 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 here. I think I got long, somewhere in here, rode this thing up, scaled 85% of it, put my stop in at my entry, and got out. So where does Shop go from here? I don't know. I do know it's in a downtrend. Well, actually, depends on what that closing bar was. It broke an uptrend. MACD's weak. It did hit new highs with MACD. So, and by the way, we didn't look at CME, which I want to. This hit new highs with MACD. So, as crazy as it sounds, this price structure right here is toppy. But I think once it works this consolidation off, I would look for leadership. I would look for leadership from Shop and CME when the market decides that it wants to go higher. I think those stocks could lead again. So 27 minutes in, we're closing this video out. We've had 4 good uptrends this year. We had 11 last year. I'm reducing over the last couple of days my long market exposure. Doesn't make me bearish. It makes me cautious of a sloppy tape. It makes me preserving large year-to-date gains that I don't want to give back. The game plan. If we go break out the new highs, I'm going to be ultra long. But you also know these next few days are going to be in and out. It's not going to be. I'm not going to be trading specifically on Friday, Monday, Tuesday, and Wednesday. I won't be trading. I will be up on Twitter on sometimes Monday, Tuesday, Wednesday, not on Friday. You're going to get the ESFL every day, the daily updates every day, and the video updates. So everything will be on schedule. The Twitter will be a little off. Obviously, no Twitter Friday, and then selectively on Monday through Wednesday. That's all I have for you on the market video update. Have a great day.